we are not sharing the screen yet. Good morning, it's Friday, the 21st of November, and welcome to Trade Live with IG.
Hands up if you got caught in that shit show yesterday. Yes, I did. As a newly reformed bull, that was not enjoyable.
I don't remember seeing a 2.5% update turn into a 2.5% down day. That was outrageous.
With no bid.
No,
it just collapsed.
Yeah. Yeah, it was incredibly straight, as in it was just the gradient of the NASDAQ sell-off. I don't think I've ever seen something so just consistently selling off. I mean, it was clearly something systematic, some kind of algo selling into it. But what a move.
Look
at
it there.
Go on, you show your chart first. Yeah, look at that.
mean,
from the open, just straight down.
There we go.
Yeah.
There was no hope. There was not a single chance between 3:45 and 6 o'clock to even take a little,
there was no entry.
Bit of a turn out of it.
No, I mean, you've got that one green candle.
Yes.
That in the middle.
Yeah. At 5 o'clock. And that was what I was trying to play. I was trying to play the European
close.
Guys puking it and then try and pick some up about 4:45. Thought I was a hero and then got a slap in the face. It was just horrible. Spice and I were sitting in the pub after the podcast, right? And so we'd been sitting there. We had a bit of a night nibble, and CJ left, and Spice said, "Oh, do you want one more?" I was like, it's the non-farm payrolls soon. I want to get home for them. He goes, "God, we can watch the payrolls here. I have one more." So I had one more. And then, of course, it gets to 2:10. And I'm, right, Spice, that's me. I'm going. He goes, "Oh, we'll watch the open here together." Spice, I've got to get home. It's a big day. Boom. Anyway, my P&L at that point was looking beautiful. Yeah. Right. And then the options opened, and it was even more beautiful. I was, "Oh, this is going to be a great day. Yeah. Sure, I'll get the next round, Spice. No worries." Yeah. And 4 o'clock, just
completely game over. Well, I went for a drink with the originators of this place.
Oh, wow.
I went out for a drink with Mr. Jeremy Naylor, who was in town.
Brilliant.
Sarah Walker, who was one of the original guys, one of the original hosts on here. Josh Mahoney was out, so we had a couple of kind of old school vintage IGTV.
Brilliant.
Beachy was there. Ange came along. It was great. Yeah, producer Fred was there for a little bit.
Oh, it was amazing.
Everyone, he says he watches and wishes us well, and says he likes what he's done with the place, which is good.
Fred watches, does he?
That's right. He said he does.
Yeah, exactly. Yeah.
So that was good. But no, if you've had a bad afternoon, I woke up this morning, freezing cold, scarves on, jackets on, coming into work, tap into my pockets, headphones. The box is there, no problem. Pull them out. One's missing. Oh. Just one headphone.
Random.
I'm thinking, what has happened here? So I'm, one headphone in, walking along. What nightmare? Where's it gone? I've got to go find it.
Is that hopefully, that's your story.
That was my worst morning of walking in and trying to figure out where
people's P&Ls have been obliterated and you've lost a headphone.
I can't believe it.
I tell you, if the NASDAQ's up 2% today, I'll buy you a headphone. How about
that? I've dusted off an old meme. I sent this to you yesterday.
Yes.
So when in the depths of post-tariff markets, I remember you pulled this out, or you were trying to explain the difference between all these geopolitical ones. Yeah. And I just thought, today's the day where we have to try and explain why the market sells off when NVIDIA double beats. Deary me.
Incredible.
Deary me.
He's a great trader, though, him.
God, the frog.
Right, tell us your woes then. Come on, let's hear the war stories. Did you get caught in that yesterday? Or, as our first friend to post this morning, Peter Shastri, did you have a great day? Did you see that was all a bit of a glory, everybody patting themselves on the back, and it was that an incredible first hour, and then did you see it coming? Well, Piers certainly did. Piers was mocking me.
Didn't see it.
No, did.
So what,
3 p.m. he was saying, just watch this fade.
Really?
Just watch this. This is Nokia fails to go up here, it's going to turn. So fair play to him. Yeah. I had to say to him at 9 p.m. that he was right. It was horrible. Not used to that.
Oh dear, what a day. Yeah,
what's coming up on today's show then?
So I will be with you, thrilled to be here till at least 8:15. We're going to do a little bit of fast markets. We've got a little bit of guess the chart coming in the opening bell. We'll do the back to front, and then after that, what do we got for the rest of the morning for you lovely people? Ron William is coming in to have a chat with Angeline on Edge, and then you're having a little look at the US pre-markets.
That's right.
And then it's time for porridge.
I've had my porridge this morning already.
Mr. Bill Blaine is going to be coming in live from probably his house, 9:10, chatting to Angeline about what's going on in the world. There you go.
Good stuff. So that is your 21st of November. And let's go in to, Poppy. There's Poppy. Can't believe you were done by Spice. Just one for the road, Rich. One for the roads.
Yeah.
Boom. 3:30. He's cost me my P&L. Let's go into overnight action. I don't know if it's just our system, but I'm seeing everybody's email address rather than their names. YouTube seems to have a problem this morning, so we're trying to pick out who. We know who Maturin is. So let us know who you are. Funky Gibbon, we got that one. We got Poppy.
Trying to figure out how everybody is. Away from the numbers, you're there. Yeah, the ashes.
Has Bitcoin just hit 81?
Not great.
No, well, 83 is it? Yeah, God, Bitcoin just
83, 84.
collapsed, but it hit 81.
Wow.
My goodness me, what is going on in this thing? Let's get that on the 1 minute. Yeah, brutal. So just as the clock turned 7:30,
boom. Well, you got to watch.
There's so many stops around, isn't there?
Yeah, the problem, I guess one of the things we're going to have to watch in the kind of wider Bitcoin space is the value of MicroStrategy is now getting towards the bottom of the S&P.
Oh, really?
It's getting towards the bottom of the S&P. Yeah, so you may end up with some systematic selling in that name because it's just been beaten up and spat out. If you want to pull the chart up, I mean, it's just been getting absolutely killed. Oh, flip on to Rich's chart there. Look at that.
That's a straight line from 400, isn't it?
Cannot find a bid. Just cannot find a bid. So, yeah, not great there. So that'll affect the stock. It doesn't necessarily mean it's going to affect the price of Bitcoin. Well, to watch out with. Well, it depends on
at what point does it become
a problem.
Yeah.
Well, because all the preference shares that they're now running, where they have to make sure that they're committed to, I think it's either 10 or 12% yield, depending on what they're selling. Yeah. Which will be tricky.
So I mean, look, it's we're not getting anywhere close. We're talking more like 40,000, I would imagine, would be painful. But yeah, Bitcoin this morning, I did not expect to see it here, I've got to say.
No. Right, do you want to look at retail sales?
Go on then.
Just freshly out at 7 o'clock this morning. Retail sales came out month on month was a big miss, unfortunately. Let me see if I can get some data up on my screen here for you. You go.
Yeah, I'll get that one.
So retail sales came out month on month down 1.1%. That was on the versus a 0% change forecast. And don't forget, we were up 0.7 prior. So that's not great. Year on year, it's up 0.2 versus a 1.5 forecast. That's a big swing from up 0.7 to down 1.1%.
Yeah, I think that seals the rate cut in December for me.
I don't think that's great, and you're also going to get a second wind on this because we've also had numbers from ASOS this morning, and they missed as well. So you're going to have, is there double trouble?
I don't think anybody uses them anymore, do they?
People do. People will do.
Are you an ASOS?
No, I'm not, but I'm not their target market. You know, the kind of fast fashion wheel.
The pretty little thing just smashed them to pieces, didn't it? I think there's much better now. What's the other one? The white something. There's another brand as well, and it's literally White Fox. Thank you, Terence. Good knowledge. It's just to say, it's great to have Terence back from COP.
Yes,
he was in Brazil. He was not the fire starter, and he's been back since Sunday. So yeah, we're getting all the reports in from COP this morning. It sounds like it was perhaps not the organisation. Skills of the Brazilians did not quite meet what you'd expect in the US or Scotland or...
I will have to get him on to tell his stories then.
Yeah. Go on, Terence, come in.
Come on, Terence. Of course, you've got G20 next week that the US is saying that they're not going to go to, which will be very interesting over in South Africa. as a kind of another kind of big macro global gathering of people.
Yeah, he's got this thing about South Africa that he's just dreamt up this imaginary scenario that doesn't exist.
Yeah.
It's bizarre.
Yeah. So you've got. I was listening to Catherine Levitt. She was in kind of her press pool yesterday, and she's like, "We're sending somebody. No, we're not sending a special envoy. We're not going to send a set of ambassadors, but because we're hosting next year, we're going to send someone to effectively go and pick up the torch and carry it to next year. But they're going to do no talking. They're going to do no nothing. They are there purely on a ceremonial basis to receive the G20 event for next year. That'll go down well." Right, what else do we have this morning? We have had. Did you see the Japan news?
Should we have a look at Asian markets and then you talk about?
Yeah, you go.
Yeah, let's get Asian markets up and then go on. Tell us what's this Asian markets, guys? On producer Phil's slide. Producer Phil's obviously gone for coffee, has he?
Let's have a little look at this. So, yes, overnight in Japan, we've seen
down 2.4%.
Yeah, down
on the Nikkei.
So, we've seen that the Japanese government have approved a 21.3 trillion yen stimulus package.
Oh, right.
21.3 trillion yen. That comes out at about $135 billion.
Done a lot for the market, hasn't it?
Well, I don't think I was expecting the market to move way more than that. Way more than that. I mean, the yen hasn't blinked, really.
Was it all priced in already? They're expecting it.
Must have been expecting it. So it shakes down to 20,000 yen cash handout per child, energy subsidies for immediate relief on cost pressures. They're going to raise the income tax threshold and abolish their provisional gasoline duty that was already priced in. And they're claiming that they're going to invest in semiconductors and AI. So not good. 10-year Japanese government bonds, the yield hit 1.8% on Thursday, which is the highest since June 2008.
Wow.
So that's to watch out. I mean, you've got, where's dollar yen at the moment? Because that thing has just been on one way.
Jesse 14 asking, is this Japan's Liz Truss moment?
Yeah, is it? So let's have a quick look at this on a kind of 3 or 4, 5 minute time scale here. And it hasn't really reacted. It's getting a little bit stronger. But this will be why. You know, ever since April, you've gone from 139 to 156, just a straight line up. The yen is just getting absolutely hosed. Absolutely hosed. So yeah, 21.3 trillion stimulus. So
talking about Liz Truss moment, we had a great podcast yesterday. So Poppy, Spice and I had Adam Smith on, who is not the godfather of economics, but close. He was the political advisor, special advisor to Jeremy Hunt during the Jeremy Hunt period after Liz Truss and obviously Kwasi tried to torch the country. And then he got...
Kwasi Kwarteng's now like a Bitcoin enthusiast.
Now we know why Bitcoin's gone down.
Yeah, like, he got retweeted for some reason the other day. And he's gone full on like laser eyes.
Brilliant. So Adam Smith came on and we had a really fascinating chat. He previews the budget, but he doesn't just give you the preview that everybody else is going to be doing in the newspapers. He tells you what happens from the inside. How do they sit down? How do they go through all the process of preparing the budget, the to and the forth, the arguing about what goes in and what doesn't. So he gives us a peek behind the curtain on the way that the budget is prepared. So that is The Art of Investing. That will be with you about 4 o'clock this afternoon. And it includes myself, Poppy and Spice's, our own little go at preparing a budget.
Oh, nice.
And they're very different.
I'm not surprised.
We learned a lot about each other.
Nice. That's cool. That's really cool.
It was literally the 3 bears in Goldilocks. 1 too cold, 1 in the middle, one too hot.
Nice. Cool. Good stuff. Right, what else have we got to look at this morning? Numbers out of Babcock. Babcock this morning. So they've had a decent set of figures. First half adjusted operating profit, 201 million versus 187 million, the expectation. Shares have had a decent run this year. They're up about 130% year to date. So we'll see whether they actually come off after these decent numbers. Bang in line with guidance. They're paying a 2.5 pence per share dividend. Anything on a pre-market call you got there?
Not yet. Just trying to pick up a few of the pre-markets. We'll have them shortly.
Elsewhere, we've got Tullow Oil. Tullow Oil have also come out in the FTSE 100. Their 2025 whole group production figures expected to be at the lower end. Guidance for next year even worse, down to 34 to 42,000 barrels of oil per day. Not great. Management continues to explore options regarding private funding, but given the risks associated with the business, is now progressing with alternate options with creditors. That's not good.
No.
That's not good.
Upgrades, downgrades. You've got upgraded Rentokil, Bunzl, Nokia, Experian, AJ Bell, Frasers, Pension B plus 500, and Trainline.
Okay.
But on the downgrades, very timely actually with these retail sales figures, they downgraded Greggs
Oh, what?
and Pets at Home.
Okay. Pets at Home was one of my great misses. Because I had them, I remember reading, this was back when it was pre-COVID, and I was reading, the internet as you do, finding all these different reports. Yeah. And I found it was a research note from Investec and their kind of equity coverage guys. And for some reason, that was what I was reading. And they put Pets at Home as one of their top picks.
Right.
And it obviously came off during COVID initially, as everything did, and I got out. And then the whole pets movement, 2 years being working from home, I got a dog, everyone else got pets.
Yeah, of course.
And this thing just took off and never looked back. It's one of my great misses. One of my great misses.
That's interesting. I have not looked at this in years because 2018, we basically thought it was going bust. They were having to do rounds of funding and everything. I'll tell you what, let's go to a weekly.
Yeah, there you go. So I missed most of that.
Down here at a pound, that was it. There was a chance it was going to go under then.
Yeah, I think I got them at 150, something like that. And then, just didn't hold them. I mean, what a complete and utter wet wipe.
There you go. August 2020, everybody looked round and gone, oh, you got a pet?
Yeah.
You got a pet? But 240 up to £5, wow.
Yeah, crazy. What else do we have out there in the space? Oh, some M&A news out of the UK.
This market's taking a turn, just to update everybody. Bitcoin is now through 84,000, and that has taken the US futures down to flat as well. NASDAQ's actually gone negative, so that's not going to help the sentiment on the open, is it?
No, definitely not. Well noted for you there. Elsewhere in the UK, so Inspex Group, smaller cap company, confirmation of an initial approach. Oh, why is my screen not zoomed in? I'll tell you what I'll do it on the platform instead. Confirmation that they've been approached, it looks like. Let's see if I can find the story.
Cool, what a day to get a bid.
Yeah, I know, when the market's rolling over.
Save you.
Right, I'm going to just look in. 2 potential non-binding cash offers to acquire the whole business. Both offers were rejected by Inspex. So keep an eye on those guys on the open. Mm-hmm. What else? Not a huge amount else. Hammerson, they've completed an acquisition for the remaining 50% interest in the Oracle, which is a shopping centre in Reading, I think. Did you see Fraser's bought a... Fraser's Group, they took a stake in a shopping centre yesterday. I saw that flash across my screens.
Right.
So Fraser's Group, Braehead Shopping Centre. Braehead, yeah. So what have they said here? Braehead Shopping Centre in Glasgow, Scotland's largest retail and leisure destination. So this came, it was yesterday mid-afternoon, so it kind of got lost in the maelstrom in the afternoon yesterday. Their CEO saying that it's an important step in delivering our property ambitions and accelerating the elevation strategy. Interesting. So there's actually quite a few things going on in the retail space then.
Yes.
With the retail sales not looking particularly sexy, we will have to keep an eye on it.
Right, no moves as of yet. No pre-markets. The team are
asleep
slow this morning.
Clearly.
Or just scared to predict anything with how fast this market's moving. But with the FTSE down 1.2%, the DAX down 1.5%, and the Euro Stoxx down 1.5%, it is, get your hard helmets on. It's going to be scary. And just be careful with that risk, because Bitcoin's telling you right now, this isn't over yet.
No. I mean, what would you... Do you think it's Bitcoin that's pushing sentiment in the tech space, because we know the correlation exists between the NASDAQ and crypto. Do we think someone's blowing up and you're just seeing this huge exit?
Oh, there's huge pain in crypto.
And people are just exiting and deleveraging. And it feels like that first aggressive move, which was what now, 6 weeks ago?
Yeah.
4 weeks ago?
It was the
weekend.
the Binance mess up.
It was it the Binance mess up? Yes, it was. Yeah, that felt like something broke.
Yeah.
Because that was the top.
Well,
that was the recent top.
It's
at
the
least.
carnage that's been caused because of it. That was it started the snowball rolling, and now there's so much pain because everything you're learning now on crypto was built on leverage.
Yeah. Yeah. Just watch out. Just watch out.
Volatility 2267, still down on the day. This is be a really interesting one to watch. Let's go to the daily on that one. Yeah, you can see April, obviously, we've had the peak at 35.
Yeah.
Even though yesterday was the biggest turnaround since April with 4.5%.
But it wasn't a panic move yesterday.
No, very
leisurely pain. The worst kind of pain. Just with that little drip that just, we got waterboarded by the NASDAQ yesterday.
You don't want to see this go above 25 today. That would really put some alarm bells out there.
Yeah. Well, did you see that chart that was floating around yesterday? The previous 2 times that, and let me see if I can get this. The previous 2 times, actually I texted it to you, didn't I? The previous 2 times that we were up on the S&P, I'm not going to be able to get this up on the screen quickly enough. S&P, so the only 2 times that the S&P has opened up 1.4% at the open and then gapped down to close negative has only happened 2 times before in history. April 2020, after COVID, and April 2025, after Liberation Day.
In those, you actually had a story. You don't really have a story here.
No.
I think that's what caught me by surprise so much yesterday was that NVIDIA numbers are fantastic, right? They're really strong, and it reiterates their own story. It might not reiterate the rest of the AI story, but the stock gets hammered.
Yeah.
And then there's no real story in Bitcoin. It's just that continued delevering. The jobs numbers, all right, you had 118,000. If we can show those, non-farm payrolls were 119.
Yeah, they were actually all right, weren't they?
Going to get those up, and please.
It was the combination, though.
There we go.
It was the combination. So it was a bit for the Bulls and a bit for the Bears.
Yeah, but this number isn't necessarily strong because you got 4.4% unemployment. Now, the macro funds look at unemployment. The Fed looks at unemployment. The payrolls are just so random that it's not a survey that macro funds really focus on.
Yeah, so unemployment ticking up is not great. But surely that gives you more reason.
Yeah, that's what I'm saying. If you were pointing towards a strong jobs report for yesterday's sell-off, because less chance of a rate cut, then I just don't think that was the case.
Yeah. I think to me, I think it comes, you take a step back a little bit, and what has fundamentally changed over the past month? The tech story, sure, okay, everyone's taken on a little bit of leverage, and the kind of the question mark from Sam Altman sitting on that Brad Gerster's podcast and throwing his toys out the pram when asked about how he's going to fund it. There's a bit of doubt in the AI space, okay? The story fundamentally hasn't changed.
So.
And rightly so, but the story hasn't fundamentally changed, right? There's still huge amounts of investment going in CapEx. There's still a huge amount of money being made by these companies, and that was backstopped yesterday by NVIDIA. So that story hasn't really changed. The sentiment around the kind of question marks has. But does that take Facebook down 30% and Oracle down 30%? Maybe, maybe not.
Valuations in the first place were bonkers, and we spoke about that continually, right? We don't have to go back over that. And we very much said, right, okay, it might not be an overall market bubble, but there are 4 specific bubbles. But those bubbles have been deflated now, and that's why I'm surprised. Maybe there was more leverage out there than we realized. Maybe people were even greedier than we thought in the first place. But at the moment, yesterday, sentiment-wise, unless it was short-term funds, right? We know that a lot of funds out there now have positions on for a day or 2 days. right? There's hundreds of billions of dollars chasing 2-day positions now. So it could be that, but if there's something bigger at play, that was a big fail, wasn't it?
Feels like it, yeah. Poppy's just said there, ASI, AC, do you know who that is? It's just said the strategy is going bust as it's going to need to repay its convertible debt, and the only way to do that is to sell its Bitcoin holdings. Interesting.
That's not interesting. That's Poppy just assuming that that's going to happen.
Well,
CJ, stop your waffle.
But who's ASI? Who's AC? Who is that? What's the source? Would be my question. Look, you're going to see things like this pop
No, that's not a source. That's somebody in the chat, I think.
Oh, is it?
I don't know.
Look, I think you're going to start to see this when it actually goes back to why that meme is quite funny. Everyone's going to try and fit the story to the move. The problem is the move is the move, right? And the price is the price.
That's the thing.
And this goes back, you know, is it...
as I, not ASI.
As I. Gotcha. Right, as I said, yeah, fine. Look, yeah, we can fit the story to the move, but ultimately the move is the move, and Bitcoin is not in vogue at the moment. So, you know, watch out until something changes fundamentally with sentiment, and it may take...
It's a falling knife, isn't it?
It's a little bit of a falling knife, right?
There's a lot of falling knives.
What stops it? What stops it? If there is a change in the tone over at the Fed, and they start talking about these cuts, they look at the unemployment figure and go, look, I know we haven't had a whole bunch of jobs. I know
this is an unemployment figure from 3 months ago. Like, nobody cares.
Well, no, but
That's irrelevant.
But the point is, it's probably not got much better over the last 3 months. It's not going to have got, it hasn't probably got much better.
Doubt it, yeah.
Right, jump for a quick break? Or
2-minute break. We'll be back 7:58 for your open. The FTSE is going to get pummeled.
See you in a bit.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Right, welcome back to the opening bell. We are going to open the London Stock Exchange for you this morning as it's looking like it's going to be down 1.2% on the FTSE. Right, hang on a sec.
It's Friday. Let's look for the silver lining. It's Friday. There we go.
Indications so far. ASOS, obviously, they were in the news this morning. They're indicating up 2.6%, which is a surprise.
Right.
Babcock were in the news as well. They're indicating that they're going to be down 4%. How are we getting on with time? We need to open this market. Let's see where they are. Friday.
Right, bit of a late open. Looks like whoever's opening the FTSE was out last night for some early Christmas drinks. But there we go. Maybe. Oh, do we want it to open? There's your Scottish and
Still short than
Scottish Mortgage Trust. No, I'm not. Yeah.
Okay. Oh, it's getting worse. Lovely. Thank you very much. That's going to break.
So Scottish Mortgage. Then Rolls-Royce, the winner, is getting sold. Excuse me, down 2.5. Prudential down 2. St James's Place. The financials are getting hit there. Vodafone, of course, it went ex-dividend yesterday, down 1.2. They've got a lot of debt, so if debt is the one in focus.
Wow, Babcock getting absolutely killed out of the gates, down 6.6%. That is not pretty.
These miners as well. Miners down 3% across the board. Antofagasta, Anglos, BHP, Glencore. And Rio's down 2.7. JD Sports down to 76 pence on the back of those retail sales.
Wow. So Tullows on news, obviously with a big miss. They're not out yet. This is going to be an extended open. If you're in Tullows, indicating down 11.6%. Watch out below, 7.5 pennies.
So yeah, there you have it. All the AI names in the FTSE are getting hit hard.
It's just the one then.
Why is the FTSE coming off?
I know. Well, what's going on? Okay,
It doesn't make sense.
Let's look at the miners, right? Fresnillo, Antos, BHP, Glencores. What's going on in the commodity space? Because what is getting?
Yeah, I can understand that.
Okay, so
I would take, but
gold's down 1.2%, silver's down 3%, palladium 2.8%, platinum 1%.
Yeah.
Copper down 0.5%.
If you're looking at a global deleveraging, right, then yes, I can understand it. But you know, this was very much an AI story yesterday, and
wow, Tullows indicating 17% down. By the way, guys, just keep an eye out if you're in that. Not a pretty story.
Right, so Barclays down 2, Lloyd's down 1.7. Let's see if there's any winners. Are they going to the defensives? They certainly should be. Severn Trent, Unilever, Diageo. So yeah, a bit of hiding going on there.
Ferexpo's up 7%. Yeah, Antos, BHPs, and the other miners are
Ukrainian peace deal.
Of course. Yep. Of course. Good shout.
Right, Reckitt Benckiser. So that's your places to hide. You can basically take a screenshot of that page, and you know where you can hide in times of trouble. It's the classic names, isn't it?
Well, X of Ferexpo, of course. Canal Plus is an odd one to have up there, though.
If we put those ones up, there we go. There's all your Imperial Brands, Bats, National Grid. Drink your problems away with Diageo. And where's our SSE? SSE is now taking on a bit of debt, so maybe that's not such a safe haven anymore.
Ocado, I mean, what a couple of days they've had with Kroger over in the US announcing they're going to close a bunch of the fulfillment centers.
Oh, I missed that. Right.
That came out, I think, 2 or 3 days ago. So they are just not having a good time at all. Over there.
Should we have a look at Europe?
Go on, let's have a little look, see what's going on.
In Germany. Ooh,
ASML.
Yeah, there's the classic, of course.
There you go. That'll do. Rheinmetall obviously coming off. If with this kind of the stories of the Ukrainian and the US and Russia coming up with some kind of plan, down 3.3%. But then you've got the financials coming down. You've got SocGen, Deutsche, they're down 2.6, 2.5% respectively. And the automotives a little bit. You've got Volkswagen down 1.5%, Peugeot down 1.2%. Yeah, Total Energies down 2.07%.
I've just seen, for whatever reason, CJ, this is not me. Poppy has sent a message. Smarter Web is 40 pence, and the platforms held the message for review. I don't know why. I'm not going to show it. Get back in your bear box, Poppy. ASML, the biggest loser, down 5% there. As you've gone through those, let's see what else. Stellantis down to 8.10. Renault down there. RWE down there. Are there any winners in Germany? There are. In Europe. It's Puma.
Let's have a look.
Bizarre.
So Tullows is still not out, FYI. We're expecting that to open any minute now, indicating down 17 still.
Okay. And then just, Nestle, Heineken, Danone. So, continued move into the defensive names.
Is that Ferrari not open? Yeah. What's going on over there? The Italian listing of Ferrari.
Well, that's the other thing to consider here is you start getting the wealth effect. And the wealth effect has been incredible.
Okay, Tullows are open.
Markets.
Tullows are open down 17%.
Shall we
have a little look at those Tullows? Trading with a nice 1 penny spread, 5.98 to 7.96. My word, that is a spread.
Well, that's it, isn't it? Done. Let's have a look at ASOS, one that people will be more involved in. Just two companies that have just been dire
Completely.
over the last few years. Will there be support there at this 228 level, or is that toast? Can you send the stock back as well as the T-shirt that you buy? Very good, producer Phil.
Yeah, very good indeed. In spec, obviously, there was that one little tiny little bit of M&A news in the UK. They're up a nice 2.7%. So that was kind of widely out there, as recognised in the chat.
So in fast markets today, we're going to be going through all the US stocks that are trading 24 hours. So stick around for 8 minutes and we'll get stuck into those American stocks because, of course, we have got them open on this very important morning.
We've got 10 more minutes of doom to just look into the abyss.
Yeah, exactly. Yeah, let's keep everything happy and see where we're going to land. WPP down 4%. Oh, if you had played those bid rumours, then I hope that was your chance to get out. WPP dropping from £3.20 to £2.85. Burberry, it's all over there. £11. £11 has been such a level for these in the past year.
Yeah.
Scottish Mortgage bouncing somewhat. Shall we check the
let's have a little look at those
and see?
Have a little look. Where are we on the FTSE?
We've had a bounce.
We have had a bounce.
So S&P now up 25 basis points. Which we had just gone red on as that Bitcoin move lower took everything risky lower.
Well, interestingly, so you've now got the Dow is now up 160 points after last night's close. So clearly that's being bought.
Yeah.
Germany catching a cold. The FTSE seems to be waking up a little bit. We're going to need to put those the FTSE 10,000 hats back in the cupboard for a little while, I think.
Don't say that.
We're going to just put them back in the cupboard. Hopefully we can unwrap them by Christmas. And go on, let's have a look what's in the commodity space.
Yeah, so copper has managed to hold above the $5 a pound level so far. Oil 62 on Brent crude and silver 4,930. So has gold gone down? No, gold was very stable yesterday. Okay, no, gold down 1% this morning as well. There we go.
Yeah, that's down 1%. Looks like Bitcoin's found its level around 84, from what I can see.
I think I said that about 4 times yesterday.
Well, found its level.
It's found its level.
Found its level. It's found its level.
88, 87, 86, 85.
Yours.
Where's Ethereum? But I'm tempted to buy some Ethereum. Not on here, but on my one that I just store it away.
Yeah. Well, I've been buying every Monday morning for the last a small amount every Monday morning, no leverage, on the cash account that we've got through IG, and yeah, it's. I suppose the problem with leverage is you're going to have to act. Okay, if you're doing it unlevered and you've got runway, then this is the time to go shopping, right? That's the kind of slightly.
Well, it can be.
It can be.
Yeah. Not buying all your shopping at once.
No. It's Black Friday in the market. It's Black Friday today, and it's Black Friday clearly in the markets.
Is it Black Friday today?
Yeah. No, I think it's today or next week. It's the day after Thanksgiving, isn't it? Okay. It's next week. I've been getting peppered with Black November, Black Wednesday.
It's 2 weeks,
it's
isn't it?
Everything, isn't it? Yeah. There's certainly Black Friday on Smarter Web's shares.
Smarter Web down 12, down to 39. So we'll have a look where the MNAV is there. Let's have a look at Defence Holdings. Defence Holdings are 2 pence offered. You've got...
What were the other ones that have been on? Pensana? How are they looking?
Pensana. Oh, this is going to be ugly, isn't it? 92. Oh, okay. No trade yet.
Pulsar Helium. You know, we normally have Pulsars on the show.
Pulsar 37.
Blimey.
So, yeah, tricky out there. Okay, let's go and guess the chart. Hopefully the chart goes up and to the right.
Let's hope so.
But yeah, after this, I don't know if you want to stay around, but we're going to look at all the US stocks.
Yep, and we are going to give you a US stock to guess. So we'll have a good look at it. We'll see you on the chat.
I'm going to buy some Smarter Web.
See you in a sec.
Wake up, traders, time to start. We're zooming in on lines and art. Candles dancing red and green. Is it crypto gold or the S&P? Producer Phil has tried really hard to try and make you guess the chart. Indices, FX or commodities, every stock for all your needs. Here on Trade Live with IG. Can you guess the chart? Guess the chart. What do you see? Moonshot ride or fake out spree. Lines are moving, it's your part. Put your money where your mouth is. Guess the chart. Indices, FX or commodities, every stock for all your needs. Here on Trade Live with IG. Can you guess the chart? Will Rich guess the chart? Will Rich guess the chart? Can you guess the chart? Can you guess the chart?
Well, ooh, producer Phil. Sorry. Doing the coffee run. Well done.
Nice job.
Nice job. So,
Hey, what is that? Can I have the rest of it?
you got half a cup. Oh, to be fair, they're changing the machines in the building, and yeah, this one's a little stingy.
Right. 170.
Guess the chart. I don't remember one of you not getting it. Phil's celebrating the win there. Best Buy, and it's gone absolutely blooming nowhere. And look at that, going absolutely nowhere in such a long time. Rich is furiously trying to do some mathematics on the screen for us.
MNAV on, yeah, let's do it together. What's the MNAV on Smarter Web? So the Bitcoin price in pounds is 84,000 divided by 1.308. So that gives me a Bitcoin GBP price of 64,220. So guys, can we get this up, please? So 60,420 is the UK price multiplied by the number of Bitcoin he's got. That gives 171 million of NAV. All right, 171 million sterling. Then we've got the number of shares fully diluted, so including all the warrants, is 390 million. So we do 390,781,479 multiplied by 39?
They are 39 bid.
Is 152. So the current NAV is 171. The current market cap is 152. 152 divided by 171 is 0.88888. So if I'm going to wait until they get to 37, and that gives us what that would be about another 5%, maybe 38 actually. SWC.
So it's already 40. It's gone. It was 15% lower. It's now bouncing back already, 40 to 41 on screen.
So you're essentially right at 39 pence.
Getting a 15% discount.
You're buying Bitcoin at $76,000.
Oh, if you convert it back.
$76,000 you're buying Bitcoin if you buy Smarter Web at 39 pence.
Yeah, and you've got Bitcoin bouncing off that, whatever that happened at 7:30, dropping 4,000 points. You've now got it come back up to 84,630. So trying to reclaim some of that.
Has Ethereum done something similar?
Yes, it has, yeah. Ethereum's trading like two lovers in hand, exactly the same thing.
Lovers. They're going through a bloody divorce here. Those two are lovers.
I mean, the correlations are not really. They're trading. One's down 4%, the other one's down 3%.
All right, so they're Romeo and Juliet.
They're tragic lovers.
Yeah, this is a tragedy.
They are lovers eternal.
Right, let's look at these bloody American markets then. Show me the pain.
I'll tell you what, the story that I didn't expect to see yesterday, just because it was top of your list there. Walmart's numbers came out. They were all right. Not too bad, not too anything. It was just Walmart. They're relisting into the NASDAQ.
Walmart are.
Yeah, they're going to move from the New York Stock Exchange to the NASDAQ, which I did think was quite interesting.
Coffee's all right, actually. Right, so are we seeing any recovery? Alphabet up 1%. We got Tesla up 60 basis points. Uber, done. I'm in.
Okay, there you go, Uber.
At last, I've found what I want to buy. 150 shares of Uber at 83.68. Is that going to drive me crazy? Let's see.
There you go. Alphabet, what a stock that is at the moment. I mean, it was up above 300. It's been winging around all over the place, but it's not getting sick when the market's catching a cold at the moment.
AMD, my only value added, I tell you, so I was on the Discord while the NVIDIA call was going on.
Oh, yeah.
And I thought, right, I'll just put a few details in there. I put, so the CFO did all the details, and then he said, right, and okay, now Jensen's going to come on. So Jensen came on and said, some people have been saying that AI is a bubble, but, da-da-da-da-da. So I put, Jensen just said AI is not a bubble on the Discord, and rightly, somebody came back and went, oh, let's buy the stock then, eh? Jensen doesn't think AI is a bubble.
So, come on. Yeah.
But the next thing I said on there was AMD. I'm actually taking this call as negative for AMD because it showed the sheer dominance that NVIDIA has and will go on to have. So I shorted some AMD and not thinking they'd get down to 206, but they were trading at 233 at the time.
So can I offer you a little tonic in that whole kind of NVIDIA dominance story?
Can I have some gin with it?
Oh, geez, yeah. So Alphabet kind of fairly quietly launched their Gemini model, Gemini 3.
Ah, yes.
On, I want to say it was Wednesday, and it did put a bid under the market. Alphabet turned, it was down several percent, and it turned it.
Put a bit under them, yeah.
And it's the first model that they've fully trained using their own Tensor processing units, TPUs. So it's the first time they've trained a leading LLM model not using anything to do with NVIDIA's tech stack.
Okay. Sorry,
Interesting.
I thought you were going to give us something positive.
Well, no, it's just in terms of NVIDIA's moat, you're now seeing that there are players that are coming into the space with tech that you would argue can compete now.
As I said, we're looking for something positive for the market.
Yeah. Well, Alphabet now, I mean, look, it's positive for trying to find a bit of value in this market to buy some stuff, because it is a
What, a
story
stock that's already gone up 80%.
off the lows, but is not sick when the market's catching a cold.
Yeah.
If you need somewhere to hide, I'm not saying I'm not saying Alphabet's somewhere to hide, but you're buying. If you've just bought the Uber story, they've got Waymo wrapped up in there. They've got all these different things and all these different pies.
Yeah.
They're like an ETF more than anything.
Right, what's on the downside then? Well, Oracle, that's still sick. $209 there, $209 on Oracle, down 66 basis points this morning. And you've got Netflix took a hiding. Even when NVIDIA was higher yesterday, Netflix was getting a hiding.
They've been involved in this Warner Brothers bid story, haven't they?
Yeah. Yeah.
What's the latest over there?
So both them and Comcast have bid for Warner Brothers.
Yeah, correct.
That's the story.
There you go. So Warner Brothers have received preliminary bids from Paramount, Skydance, and Netflix. So they're going to be in a bit of a three-way tussle for Warner Brothers Discovery. Yum, yum. There you go.
So yeah, relatively all quiet on the Western front then. Not a percent move either direction. That's what we want to see from the NASDAQ for this Friday. Will it last, Luke Moore?
Okay, play the last 3 or 4 Fridays out. The last 3 or 4 Fridays have been negative into the last hour of trade. And then you've seen that bounce into the weekend. And then we've had fairly green Mondays. So I'm not... Something's going to...
So you think yesterday was the puke, and now it's
a calmer move. I think the one thing that worries me, to not give you a positive spin, was the systematic nature of the selling yesterday afternoon. That was CTAs with business to sell, just hitting the button and sitting there, T-wapping, V-wapping, whatever way you want to do it, just sitting on the offer and finding no bid all the way down.
Yeah.
And that worries me, because you would expect to see, when you're just looking at charts, and this is not, the most scientific technical analysis of all time, but you see markets gyrate. It's buyers and sellers trying to compete around levels.
Yeah.
That wasn't the case yesterday. And it was just straight down, and that worries me.
Yeah.
So I think we have to look to some form of catalyst to find a reason to turn this market. Now, there's a whole bunch of Fed speakers this afternoon. Are they going to come out and calm the markets? Miron's going to try his best. Trump's best mate that he's put on the board. He'll come out and say that rates should basically be zero, or whatever. But yeah, I don't know.
And he's speaking today, is he?
Is he specifically speaking to
When we're looking to him to save the market, we know things are getting desperate.
I think it's definitely. I think when we look at today, I think it's not a day to try and be a hero, though. It's certainly not.
That's it. And going into the weekend, exactly the same thing.
Yeah.
Bitcoin could be up 10% or down 10% this weekend. I can't even say it. I don't believe it. Bitcoin could be up or down 10% this weekend. So it looks absolutely right. And that is the wisdom of your years telling.
Yeah.
It's not a day to be a hero. Stick a load of risk in and then go into the weekend, get caught with your pants down.
Yeah, correct. Okay, there's a little bit of copium from Switzerland. I saw exactly the same thing there. So in DC, and I'm going to try and find you a picture of this. In DC, there's a company called something PubKey. That was it. It was called PubKey. They've got one in Chicago, and they opened one in DC yesterday. And guess who was there at the grand opening? Scott Bessent. So when your Treasury Secretary is going to an event to do with the price of Bitcoin, or well, no, not specifically, but kind of giving a community around Bitcoin and somewhere to spend, they accept Bitcoin, you can buy drinks, food, etc., etc. When the Treasury Secretary knocks on your door and says, hey, can I come along? I reckon let's say in 3 or 4 months' time, you'll say, what was the sign I needed to see that the government is fully behind this technology? That's one that you can get. So I like your copium there. And whilst we do the next thing, I'm going to see if I can find the picture for you.
Yeah, Sense, that's a good question. I know that we're all looking at trading opportunities and what. But if you are Joe Public, and let's say you're 55 years old, and you've got 1 million pension in a mixed bag that you could either hold as it is without any relocation, then you would be nervous. And that's right. If you're still fully invested and you've got exposure to the S&P 500, then yeah, absolutely.
Yeah.
You know, time to watch The Art of Investing and see about the different diversification that you can get.
How's your plug?
India was up this week.
India.
As in before yesterday, I didn't see what the market did overnight, but India actually made us 1%. So there's always somewhere to hide.
There is always something to hide. Here, look, I've got these pictures just while we're on the subject. So here he is at the opening of.
Is that a mask? Is that Tom Cruise in Mission Impossible?
So this is your pub. This is Pub Key. Nice little dive bar there that they've got opened up in DC. Looks very nice. Bands, pints, happy days. That's the chap that owns. I saw him interviewed the other day.
He looks like a crypto bro, doesn't he?
Yeah, and this guy looks very concerned about his security, doesn't he? Yeah. Here he is, very happy with himself, with his ears, or everything's plugged in.
Yeah, I'm not seeing anything crypto there.
The place Pub Key. It's an area for it's like a community space for Bitcoiners to come and gather.
Come and do what?
Cry.
What do you do? Yeah, exactly. Yeah.
Crying at the moment.
And the name as well. What a crap name.
Blimey. Well, look, I'm trying to give you.
What would you call your Bitcoin bar? Just the Bitcoin bar.
Bitcoin bar.
Yes. Better than that.
Bit bar, yeah. He doesn't look very comfortable. No, he doesn't. He doesn't look very comfortable there. It's all mingling with the humans.
Yeah, look, I don't know what to do in this market. I've tried to take down my book, and I've tried to take down my risk. And as I say, I might have a play today and might, put on something.
Yeah.
Uber is something I want to buy for my pension, and I've been waiting, and it was 94 and it was 92, and I thought, oh, it is something that I want to buy, and so I'll be. If I buy the stock now, I'll probably transfer it to my pension later on this afternoon.
Okay. A big move yesterday though, Uber. I think it was down 3 point something% yesterday. Had a big move. I was trying to figure out why. There was a line in the NVIDIA results that was saying that they're going to supply a lot of stuff to Uber for their autonomous driving, and I thought that it was. They basically said that it was going to be done by 2027. And I don't know what that was pre versus post, but that was the only thing I could find yesterday that was related to Uber, that it was getting killed more than other things.
My Whitbread's doing all right. But, well, let's take a quick look at the book then. So what have I got on at this moment in time? We've got
a way of bouncing. They're only down 4% now, 42 to 44.
10% we could have made on that. Right, so I've got some Whitbread, steady Eddie as she goes. The Premier Inn's there, happy with that. Then this equal weight S&P 500, I've got that against my short calls. Those short calls are now eventually in the money. I got a bit of PayPal, got excited when Piers got in the other day. I still, I'll trust them on that one, keep that for now. Uber, I've got 100 NVIDIA, which I bought at 187. I've been a rabbit there, but I still believe in the stock. And then Adidas doing nothing. On those short calls, you can see now those are coming nicely into the money. So
definitely nicely into the money, yeah.
7200s were up 1300, 7200s are up $2,000 and $2,000 on the 7600s. And then I've short the 29,000 calls as well. So those have turned around from a loss of £30,000
to paying
$30,000 to
paying you
to up 8. So that's thankfully paid for the rest of my mess
that's
in the portfolio.
Well, that's and that's the point about why you should have balance in your portfolio.
Yeah,
that's it.
Definitely.
That's been your play to pay for the long equity book that you've got.
That's it. That's allowed me to completely mess up those Oracle options. I cannot believe I've been caught in Oracle
Oh, no, but you're not going to be
about 30%.
You are not going to be on your own. I mean, that thing is now trading like a sick puppy. It's so far below where the deal was announced. I mean, where's Oracle trading now?
210.
210. Traded up to 320?
350.
350.
Like, have a look at this over the.
Yeah, I mean,
we'll extend it out a little bit.
zoom out to kind of when it had that news. There you go. So the news on the day up 35%. You know, Oracle's going to be the new
Great results.
They're going to be the new player. There was a fantastic FT article on them actually. I wonder if I can get them up because they brought in a load of charts to do with Oracle. But they were basically saying about how I think 68% of their expected data center revenues is OpenAI. So I think this is now trading as the only way that you can get exposure in the purest sense to OpenAI.
Well, what other way can we do it though, Luke Moore?
Oh, plug. You can do it via our IPO markets, but should we finish talking about Oracle first? You know, if 60 to 70% of their expected data center revenue is going to be coming from OpenAI, and OpenAI are the ones that have started this whole, you know,
Circular.
we'll pay you, you pay us, we'll borrow data centers type movement. That's why the credit default swaps blew out on them. Thank you very much, Rico. You know, and that's what started this all. And now they're trading beneath where they were before they even announced the news. So what the market's basically voting is saying, yeah, we get it, but you're not going to execute. And in fact, we actually think it's going to set you back on your other core businesses, and that's disappointing. They're not. Was it Piers that was like, you know, these guys have. They haven't been invited to the party. They've turned up. No one wants them there, and now everyone's who's this? Who are these guys in the corner?
Although he is long them now. But let's take it into perspective as well. Nobody has a clue what the answer is.
Yeah.
Because the answer is unwritten, as Natasha Bedingfield would say. So 2028, right? None of us can predict what OpenAI is going to do there. It could be, you know, worth $2 trillion.
I tell you what. Would you short it on the IPO?
Well, how do I find that on this?
Okay, so the OpenAI grey market that we're running, if you go onto your watch lists, pop up Rich's chart, go to watch lists, click on that,
there.
and then there is an IPO. Just go to the Discover side at the bottom, IPOs.
This must have sold off yesterday.
Yeah, go on then. So OpenAI market cap. So bearing in mind, what you are trading is this is what we are pricing OpenAI's market cap will be on the close of its first day's unconditional trading. So you're not trading directly the share price.
No, because it might never happen.
But you're trading on the market cap of what it could be. And so we're still pricing it above 1 trillion.
It hasn't moved yesterday.
So clearly no one sold it yesterday.
I mean, the problem is it's not a hedge though, is it? Because it might never happen.
Yep.
And will this ever move down?
So what did we do yesterday on it? Yeah, we just didn't see a huge amount of business on it yesterday. Maybe there's a trade for you. It moved on Monday, rated down to kind of 1.02 trillion on Monday.
And what's the story with this thing then? So if I shorted 10, what does that mean?
So it's $10 per point, and you'd be going short from 1.03 trillion. So 1.0 was that 300 million above 300 million above a trillion.
Right. So I'd be short at 1,031. So if it goes down to 1,000, then that's 300 quid.
Correct. Yeah, you made 30 points.
Interesting.
Yeah.
And I don't get charged financing on it.
No, there's no financing on it at all. No.
Okay.
No, there's no financing on it. So that's you know, the only thing to know on these is if it doesn't, I'm just checking the details here. So OpenAI specifically, if it doesn't IPO by the 31st of December, 2027,
okay.
So you've got 2 years. If you have an open bet 31st of December 2027 and you're still open and you haven't traded in, traded out, whatever you've got open, we will void, because if it's not being dealt with by the 31st of December 2027, that is when that bet is finished.
But obviously, you know, the story before then, that price should move.
Yeah, it totally
in
should.
line. So with Oracle dropping 40%.
And this isn't moving. Franz.
Shift the OpenAI. You're on the wrong price.
You're on the wrong price, dude. But that's if you've got the story. If you're viewing Oracle now as a vote on the price of OpenAI, because they're the
If
biggest.
OpenAI is worth $1 trillion, Oracle's worth $300.
Well, that's what the market said to you when it did the deal. Yeah.
Yeah. Right, R6 Senna, what do we think about Palantir now? Is it still a short? What are we down to? 155. See, now that is the price that starts to make more sense for me in Palantir, right? I think 141 was my ultimate level, right? So this is where I think Palantir should be, and that price makes sense. I wouldn't buy it there, but it makes sense. I can justify the valuation there. So we're not far off in terms of 10%. My Queen 6 Senna, then I would probably start to close shorts here. Yes, Piers is still short, but I think that's certainly around this level. I would sell puts at the 140 level and take some of the premium in.
Nice. Okay. Cool. Here's that Oracle chart that I was just looking at, the FT article here. So what this is saying is, of the deals done on data centers, Oracle, Microsoft, and Amazon, the dark blue line here is which percentage of those deals are being done by OpenAI, and Oracle is up at 58% of its future contracts are OpenAI, compared to Microsoft 39 and Amazon only 16. And that's the concentration risk you're seeing with Oracle. And it's a fantastic article. I'll, if we can, I'll share it on the chat. But it is a fantastic article, just of all how the capex has exploded, where Oracle sees its revenue coming from, all the concerns, where it's all shaking down. And it's an absolutely brilliant piece by the FT. I 100% recommend going through it.
So it's not necessarily the Sam Altman interview. That made him look stupid, and that hit confidence. It was when his CFO
and was talking about the
government backstop.
Well, yeah.
That was the moment that AI bubble burst, popped.
Because it means that they were talking about it.
Yeah.
Internally.
And we might need one.
Yeah. It's bad. Sorry, just before we shoot off, Tullow oils are nearly looking good, down 31%. Sorry if you've got those. They are having a bad day. Bad day.
Very quick update before we are about to go on. Canal Plus are up 8%. So I'm assuming they had numbers perhaps. We'll have a look at those. Some really strong moves in the FTSE there. Thank goodness Diageo up 1.3%. Your money's flown into Tesco, the water companies, and the house builders, by the way.
Wow. So we missed this yesterday. So Canal Plus, they are delighted to announce the renewal of 100% of the exclusive rights to the Champions League, the Europa League, and the UEFA Conference League for 4 additional seasons. That is pretty impressive.
It's all about the World Cup now, though.
Yeah, but that is impressive, and it's absolutely roofed the stock yesterday. Look at this. Bang.
Wow.
230 all the way up to 248, which actually in a percentage term... Oh, hang on a second. This is just 30-minute time.
Oh, that's this morning, though, isn't it?
That's this morning, yeah. So there you go. Is that a breakout? No, it's a failed breakout thus far.
Good. Right, time for us to go. Final look at the losers on the FTSE this morning. What is hurting? It's JD Sports, Rolls-Royce, the miners, and the financials. On the podcast later at 4 p.m, you will hear that Adam Smith thinks the banks are going to get hit from Rachel Reeves. It'll be a last-minute addition that the banks are going to get hit in the measures next week. So that was something that was new that I heard yesterday. Adam Smith, of course, not in the government now, but was special advisor previously. So if he says it, I got to think that there's,
There's something to do. Right, cool. Well, Ron William is up next with Angeline, and he'll be here very shortly. We're going to take a quick break, and we will see you in a bit.
Have a great weekend, all. Thank you very much, and best of luck. Keep that wrist tight this afternoon. you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey, welcome to the show. And we are joined by none other than Ron Williams. I won't mention all the amazing letters behind your name because there are many. He's also an MSTA and market strategist, educator, performance coach as well, RWA. My goodness me, what a day for you to come in, Ron.
Great timing.
Yeah, I hear that the markets went into crazy tilt up post NVIDIA whilst you were live on air.
Yes, as sometimes is the case, and it's always good to keep the screens live as markets move. In line with expectations in that strong trends typically build up asymmetric risk, and that's what we're seeing, certainly across the broad-based markets. What was a little bit more of a surprise in terms of single stock stories is NVIDIA. Earnings just came out, mostly robust.
Decent.
Market jumped up and then rolled over. But more specific, this is a market timing perspective in the sense from a technical perspective, the trend in NVIDIA as a case in point already showed signs of exhaustion. Technically, people could argue overvaluation as well, but the technicals typically lead and confirm. And the key level on NVIDIA, as you're just highlighting there on the screen, is 180. That's the support level that we're watching and currently testing. If we were to break that, then that is a long-term top reversal pattern confirmation. So it's something to at least reassess depending on how this is positioned in your portfolios. If you're long in profit and have a profit cushion and you've been able to take some profit, great. Otherwise, watch out and see how it plays out. We still need to get further confirmation, follow through, and see how things play.
I mean, this is the interesting thing, isn't it? Friends of you like me watching this in real time. I was next to Luke Moore yesterday. You know, there was this enthusiasm. I was there thinking, oh, what a difference a few hours makes. Suddenly this, it's party on, AI is fine again. But look at the rectangular bit. This is the 5-minute chart, friends, that I have marked out for you. I'm sure you saw it too, judging by all the comments on Discord, some on what Barry wrote yesterday as well. And we saw this fall all the way down into the later part of the evening by, I think, about 5 o'clock. Luke and I had given up, gone to the pub because it was just something to behold. And also the capitulation on the wider markets as well. But they do seem to be creeping back up there as we speak, taking a look at the US 500 and US Tech 100. But we saw this mirrored on the indices. What now for stock markets? Because what all this shows is extreme polarization, doesn't it?
Yes, it does. I mean, as we were just discussing ahead of time, the market has been polarized for some time. We've had those that have been all in terms of risk markets, but in particular thematic stories like AI. Others that have been on the side, basically looking for the exhaustion in the market and a potential late cycle situation. We've been somewhere in the middle with our views at RWA, based on a blended approach of macro, tactical, with cycles as a key driver, still suggesting that we're late cycle. And the issue here is ultimately waiting for the market to vindicate, confirm, and give those signals. And that is what we're seeing here live as we speak.
And give us let's have a look at some of the charts that you've prepared for us as well. I love it. I love it that you always have these amazing pictures to begin with. Take us through what you and Robin are thinking.
Yes, so Robin Griffiths, co-author of our regular report and a veteran in the field. The cartoon is our behavioral take on the zeitgeist of the moment, and it's a credit to Hedgeye for being the creative eyes of that. This is just showing, if we look onto the next slide, our key opening for the report. Every investment era has its signals, the bells that warn us when a great financial cycle is approaching its turning point. That's the opening. But the main point is we may not know the precise moment it will ring, but once it does, the tone is unmistakable. So if we just focus on gold for a moment, today that bell is gold, and it is still ringing loudly despite its latest overbought correction. And also, I would add to that, despite some of the volatility we're seeing cross-market on some of those other hot trends, like equities, like crypto, and also gold, nonetheless, gold will likely continue to be resilient and is ringing its bell for a reason. Macro uncertainty, late cycles, and other things that will likely follow into the new year of 2026.
Why is it then that we're seeing gold come off as well? As you know, I'm a big fan of precious metals in times of uncertainty. I have gold, I've got silver, I've got platinum and palladium as well. And this is strategically long-term for next year. So those positions are not short-term, but I was really fascinated to see that not only was it broad-based in terms of the tilt and the pullback yesterday, call it what you want. Some of you are saying that chickens come home to roost, pullback, correction, deleveraging, whatever name you want to give it. But gold has also come off, and this morning it is also down around 8%. We're still seeing it failing to come and poke its nose above that 20 EMA. Is that because it had a grand time recently in the summer? Is that also the reason why? Because I was expecting more support for gold, actually.
Well, the main drivers behind gold, as many will know, is, yes, the strong trend, but what's driving that strong trend is the debasement trade, safe haven flows at times whenever there's been elevated risks in geopolitical or market, and also just as part of a relative outperformer when it's already been up 70% the bull trend this year, almost twice equity markets. But if we just look at it as a momentum trade, it has run hot, and typically trends that do drop and unwind as part of a deleveraging trade, not because people want to, but because they need to. And also in some cases, it's profit taking in terms of the best case scenario. On gold, we should see a move further lower as part of our short-term tactical correction.
And tell us how long that short term is, just quantify.
So that would run into certainly year end and the new year within the Q1 phase, where we are expecting, according to our tactical and cycle work, further shakeout cross asset, including gold. But the difference is gold will likely shake out of that volatility, remain resilient, and this could and should provide a buy on the dip opportunity.
Nice. And I love it when I look at the charts, and I believe we've got one prepared by Ron as well. But just looking at mine first, really, we've got some viewers here that have signed on to take the STA level 1, level 2 after I showed my graduation photos. I didn't realize Ron was going to be at my graduation, but he was. What a lovely surprise.
Very good, and congratulations to you and to others that have decided to take the same path.
There you go. Now, it is interesting because, and it's a good thing to note that when you do this course, I'm not publicizing, I'm not getting any, kickback or anything. I'm just saying that when you do these courses, what I really love is when someone like Ron comes in. I've already drawn my trend lines in, but they tend to tie really well together with the numbers that you're looking at. So gold here, I've got a key support at 3,800.
Yes.
And I think that's a level that you've looked at as well.
Yes, a level that ties in with the averages that you have there on the chart, but also the one of the levels that we look at quite regularly during a correction is retracement levels, particularly 1/3, half, and beyond. I believe if you do that in the recent bull run of this year, you'll get 3,800 and just below that as a potential support level that will make or break. We think at least that if there are signs of support providing a cushion, then at that point we'll assess for a potential buy on the dip opportunity. The key point to keep in mind to know when that best time is to maybe jump back into gold or for gold's trend to hold is to look at relative performance, and that is a chart of gold versus S&P 500 that remains above its long-term 200-day moving average, and we still see further outperformance of gold versus equities. Of course, the other side of that coin is equities likely unraveling further, therefore offering more upside to gold and potentially US dollar weakness, which is typically a tailwind for commodities.
How much further, when you say unraveling further, how much further are we talking about? Do you and Robin have an estimate? You got charts to show us?
Yes, well, on the gold chart here, we have, the move into 37.80 actually, so just $20 off the key level that we were looking at before. That's the chart on the left, also showing minimum price objectives, which have basically tripled since spring of this year. You can just see the multiplication up, which gave us the target. We still see higher for longer in gold, but later on next year, post-shakeout. Just to re-clarify and give a visual on the ratio of gold versus equities, that's on the top right. And you can see the red line there and support, which it still holds above. And yet, the cycle work that I've been alluding to, this is one of the models we run, which provides probabilistic timing rhythm. And that shows the shakeout into Q1, not just in equities and crypto, but in gold as well. So this is a cross-asset shift that takes place. But again, focus on the ratio on the top right, gold trend likely to remain resilient.
Cool. Now, you just mentioned a word that does bring me a bit of pain, although, it is tempered by the fact that I've got a profit cushion in it, and that is crypto.
Yes.
So when we saw the turnaround yesterday afternoon, me sitting next to Luke, watching it all happen in real time, and Lefty in front of me, another PCM going, it's happening, it's turning. And we were watching it in real time. We also checked on Bitcoin, and that too, I mean, crypto's being smashed at the moment.
Yes, I mean, lots of signals here. First and foremost, crypto has served well as a risk signal. And so, yes, it's a digital asset. It has safe haven qualities, but it typically has this dual nature of risk on and risk off. And it really depends on how hot the trend runs. And this year has been strong. Not as much in Bitcoin, but Ethereum.
Ethereum, yes, it had a great run up in the summer.
It had a great run up in the summer, and there was a rotation, leadership rotation between altcoins, but more specifically Ethereum. That was into the regulatory breakthrough in the US for stablecoin, which is fueled by the technology of Ethereum. So that was a little bit of the fundamental story behind it, which timed in. But since then, at RWA, we've been looking at Ethereum and crypto in general as a early risk unwind signal. The market did top in August. Thereafter, we spoke, I believe, in September. So the market still looked strong, but had consolidated since into our chats thereafter. But look at what's happened since. So Ethereum in that top chart, we spoke into the consolidation period. It wasn't clear whether that was going to break to new highs or retrace to new lows. The latter has happened. And you can see the ratio on the top right, another ratio chart. I know we don't live in ratio land, people trade in absolute terms, but ratios help to understand both sides of the coin, particularly if you're looking to allocate one market over the other. And if you want to know which one's going to be more resilient in a volatile situation, that's the time to look at a ratio chart. So even if you don't trade it, look at it.
To give you context.
To give context, which we often lose when things are moving pretty hard and fast. So the chart on the top right shows that in Bitcoin up, Ethereum, when this chart goes up, Ethereum's outperforming, Bitcoin's outperforming Ethereum. But in the recent recovery that we've seen, in the recent unraveling we've seen, Bitcoin has held a little bit more. Either way, both are going to likely unlock further downside. And probably the recommendation here and now, depending on people's positioning, is to consider a strategy well known and driven by an industry colleague, Charlie Morris, which is bold, and that's a combination of Bitcoin and gold. It's tickerized, it's available in the exchanges for people who want to look into it, or you can just consider an approximate 80-20 split between the two. And if you do, you'll do well during the good times and double up when both are going higher. But more importantly, you will risk diversify and have a better volatility cushion, particularly for the likes of Bitcoin when things change. And right here and now, you can see that bold index holding above its trend. Yes, it's had a correction.
Put up my chart gallery, you'll see what Ron is talking about, and that is, it's of course founded by Charlie Morris, who used to be the boss of the HSBC Absolute Return Fund. Gosh, showing my age there. I'm glad you're talking about this because I do have gold and I do have Bitcoin, and you know, it's interesting to also see that this has been created and put into the bold ETP. I guess the question here is, will Bitcoin and crypto assets follow that same wave whereby we'll see this expected, you say you're expecting a correction in Q1 for equities. We've seen crypto more and more aligned with equities, right? The longer we watch this financial instrument. Are we going to then see after Q1 perhaps that cycle turn?
Well, it's been turning already here and now, and certainly the correlation unraveled in past weeks, and so that will likely continue. So it's already starting to show up, and it's a great question that you're asking in terms of what to look for going forward. The fact that they're correlated so well in past times shows that the correlation was more a risk on behavior, given that it was basically strong and hot momentum trades, including gold for some of that time, but clearly for very different reasons in terms of debasement, safe haven, and just general relative outperformance. But certainly equities and crypto typically have this kind of love-hate relationship where they sometimes correlate and other times don't. Now we're in the phase where the correlation is turning negative.
As a technician, I hate that.
Yes, it's difficult.
I hate it when...
Well, the best thing to do is to run a correlation coefficient, which is easily done on charting platforms nowadays, and that will show you that there is a cycle to correlations. And you know, one of the first things I did when I started off in the industry, I did this testing to realize, you know, the context of market relationships, and you just realize there are times when they're strong and there are times when they're weak. And we must never believe that there's an absolute relationship to anything, because things change.
And speaking of change, I have to be devil's advocate here, because I thank you very much, all of you that send questions to me. I have to be devil's advocate here for some of our trader friends here, because that's what we're here to do, and be unbiased and make sure that we poke holes in each other's theories to make sure we are not blindsided by anything.
Absolutely. Good to stress test and
Yeah.
to have our biases in check.
Exactly. You know, I like a stress test. What do you say to those that say, you know, crypto, it's over? It's over.
Too early to call either way. I would say anything that has a strong thematic to it is something we typically fall in love with. And what I'd like to say is that both in life and markets, falling in love is fine, but blind love is the issue. And so I'd argue back to everyone that is blindly in love with the upside or the potential Armageddon downside story, and just trade what you see. Let the market speak for itself, and give you the evidence, the body of evidence, to make a trading decision. At the end of the day, we're managing money, so it's really important to be prudent and not be too emotionally biased either way. And blind love is unfortunately one of those traps that we can fall into.
Boston Frank there coming on to chime in. Bitcoin down to 83,000. Michael Saylor losing big time. Sensei, good morning to you. Are you from Korea, maybe? Let us know. The title here is AI Fears back in. They were out for just a few hours. Yes, that's right. Not a huge amount of time, so get your questions in whilst you still can. We have one last chart from Ron. Let's get it up here.
Just a quick note on Boston Frank as well about the Bitcoin down 83,000 and the Michael Saylor losing some of that. It's good to look at anecdotal headlines and to see what some of the big players have been doing, and I have also noted that. But again, just go back to the technicals. That'll give the chart context, but this is an interesting point there about some of the headlines and how they chime in.
Have you seen those memes that have been appearing over X? Every time Michael Saylor, there's a call to Michael from the community around the world to stop posting those AI pictures of him in like suits and, you know, knights in shining armor, because every time he does that, the crypto market tends to fall. Anyway.
Well, we also had the big short call out from Michael Burry
exactly.
on AI, and specifically he made some points about some challenges he saw. So we'll see how his call also plays out.
Yeah, there you go. James Bennett as well coming to the fore with more comments on Saylor. Right, let's get the last chart up, because I know we're running out of time and this is very precious, our time with Ron here. Talk us through this S&P 500 risk pattern and how does this tie in with your call that we're likely to see a big correction in Q1?
Yeah, so for now, certainly 20 to 30% is likely. The 200-day moving average is a target that we could keep in mind. But let's not race ahead and think the worst. The market still needs to confirm. This chart is before the fact. Here and now in live markets, that trend has broken. There is a top in place, and that is confirmed. And so certainly we'd need to be watching the current levels where we are at the moment, around 66,600, which is the prior swing low. Just to take a step back and remind everyone where we've come from, complacency was at record levels. And that's the chart on the top right showing the VIX at those extremes. And the extremes, actually, more interesting for me, were echoing 2022, where it wasn't the end of the world, but it was non-consensus, volatile start of the new year, which we're seeing on our radar. Buy and hold didn't work so well. 60-40 didn't work so well. You had to be an active and astute trader with very good risk management. And that's what we foresee for next year, broadly speaking. And if you look at the last chart, bottom right, that just shows, again, the timing aspect to our edge. And you can see there also there's a Q1 trajectory, which begins now, but extends into the new year.
Right. And I have to also put out to you, because I've had questions from clients saying, can you please ask Ron when he's in? So we talked about markets being polarized, especially stock investors, and they're evenly split, which is why this entire journey, the last 24 hours, has been so exciting for all of us who watch the markets like an eagle. A third who are now still very long AI-related stocks, tech stocks, Mag 7. There's another third that are freaked out, to say the least, about what they've seen in the last 48 hours and are still, mostly in cash. And then there's a third camp that are half and half. So half in AI, tech-related Mag 7, and then, but the other half of their portfolio is, very cautious or in cash. What would you say to these three different camps if they had a 1-year time frame?
So trying to moderate somewhere in the middle in terms of the strategy and the mindset, so that we can be prudent in decision making and ultimately performance. What I would say to the AI camp is, the long-term innovation tech story remains, but market timing is going to be key. As trends and perceptions of those trends overrun, there is typically a reversion back to mean. And that's separate from the story. That's just the technicals of the market. So we have to pay attention to that, because that's the behavioral drivers to market, which is everything, as we all know. So be aware of the market timing, the potential reversion back to trend, but also as a consequence, the bifurcation that typically will happen within AI world. So there will remain winners, but that some of the stronger winners, which have been the poster child stocks and have run strong momentum, hot trades, will likely be too hot to trade aggressively. And it's probably best to look for some other rotations within that sector and others. I just had a gentleman, fund manager, talk to me just yesterday in that discussion I mentioned to you, who's big on
Jim
Puplava at
Puplava.
Financial Sense, who manages his own wealth management firm and runs a podcast. But many others like him who manage money, looking at some of the other relative trades, like precious metals, which is a trade that has mostly passed, but still has been profitable, twice as much as equities. But actually his point was, look at gold mining. Mostly hated by those that traded it from a previous era. And yes, it's had lots of fundamental and balance sheet issues, but since we've had base formations, strong recoveries, and there are other examples of markets which have had an opposite setup, and yet outperformed in a good way this year. But I would say within the AI space, bifurcation, look for other names and rotation within that sector, and then also cross-asset, look for others as well. And then across the board, I would say take profit, good times for reassessment. That includes taking profit, de-risking, looking for some hedges. And for those who are maybe more aggressive, you can maybe look to open up some shorts. But I would say all depends on your mandate and mindset. For now, reassess and look for de-risking and see how markets play out.
Thank you very much. We like prudence here, and also making sure your risk reward fits your profile. Thank you so much, and I hope you have a good weekend, Ron. Looking forward to seeing you back here in 2 weeks' time, I think.
Look forward to it.
Yes.
Thank you.
Yes, and for all of you that sent in questions, thank you very much. Do hit the like and subscribe button. Also, you know that whenever you send me questions to us at ig.com, I get it directly. And if you have any for Ron, I'm happy to put that to him as well and get you the answer. Right, stand by, stand by. We got Bill Blaine flying in his Spitfire. Up next from Windshift Capital.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, trader friends, welcome to the show. And we are joined by Bill Blaine, principal at Windshift Capital Advisors. Bill, always good to have you on, especially on a frosty Friday after we've seen the turn in NVIDIA. Bet you're feeling a bit vindicated there.
Oh, over the moon, as they say. It is beautiful this morning down here in sunny Hamble, where I usually am on a Friday morning. I actually had to come down from the other office, which is now the studio, because it was just too bright this morning. it was bouncing off my screen. I'm going to have to fit something to make it a bit more efficient.
Stop
But yes, you're
complaining. Stop
quite
your
right.
complaining
The
for people who
markets
where it's
are
dark here in
doing what I
London.
predicted they would do in October.
Yeah, and we also saw that turnaround. I was watching it live on the charts with the trading desk as it happened yesterday afternoon. And those who were crying over the shorts earlier in the day, I really hope you held on because look, in that rectangle there, you can see the move starting there around 2 p.m. or so, and then all the way down until about 4:30, at which point some of the people on the trading desk and I thought, you know, we're having a headache now, let's go to the pub. So we end up in the pub.
Yeah, there's more to come on this.
Oh no, I knew you were going to say that.
I think we're going to really have to devote a whole show to AI and talk about where AI is going to go.
Do I hear you saying that T word, tensor?
Yeah, exactly, because Google's TPUs, the tensor units, they are going to change this equation completely. Now, next Friday, I am running a small lunch for a bunch of my AI colleagues. I might just have to invite you along to come and spook that market, because this is the kind of stuff we've got to be talking about. How the AI market is going to happen. AI is going to happen. It's here. We know that. What we need to look at is how is it going to happen? How is it going to change our lives? And you take a look at what Google is doing, and they're embedding Gemini in the search engine. And last week we were talking about how in the future we'll forget what search engines are because our AI will be embedded on the screen whenever it will immediately do stuff for us. We'll forget what
It'll be in the background.
filling in and that. Exactly. We will forget what asking a question on a search engine is because your AI will do that for you. You might decide to be really old-fashioned like me and type it in, but you'll probably tell it what you want and it will give you something. And the way that the companies will get rich off it is they will be selling your requirements to the highest bidder. And I was talking about it earlier this week, and I mentioned, supposing me and Mrs. Blaine are having a chat about what to have for dinner with friends tonight, and I say, I really fancy a good steak. And Gemini, and it will be Gemini, that will turn around and it will say, Bill, the local butcher, Jake, he's got some really nice Dexter rumps just now. And I'll go, oh yeah, order 2 of them, will you? 2 big ones, and it will be delivered 20 minutes later by drone. But the thing is, it will go to Jake the butcher because his AI agent is currently paying Google's Gemini the most to be top of their chain. And that's the way the future is going to work. Now, why did I say it's going to be Google? Because it is going to be Google. I reckon OpenAI is toast already. And that means that the whole circularity argument around OpenAI, that's going to wobble as well. So as I said right at the start, and I wasn't intending to start talking about AI and NVIDIA, I think this game is now into its final phase. And I would not be betting on NVIDIA. That's my own guess just now.
We all know that this tech already works, right? So those of you that have used WeChat, have you used WeChat, Bill?
WeChat, I'm sure I have. Yeah.
It's like WhatsApp, but on steroids, and it's mostly used in...
If someone calls something WeChat, I can't possibly use that. It just sounds too much like WeWork, which didn't.
Well, you're just talking about the entire Chinese population.
All right, okay.
Yeah, and WeChat, I'm going to show this to you. Here we are. WeChat is what they use over there instead of WhatsApp. And
right, okay, that's where I've heard it, yes.
Its functionality is it's like on speed, right? WeChat allows you, years and years ago, ways of chatting that have only just started on our WhatsApp. You know, all that emoji stuff that was happening way before. But what's also interesting about WeChat is it's also an instant payment system. It's also being trialed for Smile Pay. So you don't need your wallet, you don't need your credit card, you don't need your watch, you just smile. But what is key is that they have proven
I'll
that
be
the
paying all
retail.
the time.
Well,
I'm
I don't
always
know.
smiling.
The last time we went for a meal, you didn't pay, Bill.
I did. I did.
You
so
paid for producer Phil. You
I
didn't pay
paid
for
for
me.
producer Phil.
You didn't pay
I
for
bought
me.
producer Phil his lunch.
I
didn't pay
noticed.
for you.
I noticed you didn't
You're
pay for
far wealthier
me.
and more successful
Oh,
than
for
me.
goodness sake! But more importantly, anything that you see, for example, a friend is showing you pictures of his new yacht or a new boat, fixture from the Chandlers or whatever. It then tries to almost sense
sell you that.
what you like, and immediately.
Yeah, because that is our future.
There you go. There you go. So we
If
know
you
that
thought-
works.
If you thought that you were being spied on, because every time you chatted to your mate about, exactly as you say, a new yacht, and then suddenly your Facebook feed or your email is getting deluged with adverts for exactly that product, you were right. That's what these things were doing. That was the whole thinking behind Siri and Alexa, to listen into us so they could sell us the stuff that we thought we might need, and they confirmed we needed it. And that's going to be magnified by the future. And the real things to be thinking about are who the winners and dyers, not losers, but the dyers are going to be. And my bet is that Google is going to be streets ahead, because they're doing what we call the tiger strategy. And that strategy comes from the Second World War, where the Germans had a fantastic tank. It was called the Tiger, but they only built 1,500 of them because they were so complex and they were so difficult to maneuver and all that kind of thing, and heavy. But they were great tanks. And a German general famously observed, a Tiger is worth 4 Shermans, which was the Allied tank. But the problem is the Allies turn up with 5 of them. So, it's a question of cheapness, scale, size, and how many. Quantity has a quality all of its own. And what Google have done is something we've talked about on this show a number of times. They are taking an approach to AI that is going to be cheaper, more energy efficient, possibly not as good. We called it the Betamax trade a couple of weeks ago, but it's going to end up dominating. As will the Chinese AIs, who are taking a very similar open source, open question approach to doing this.
So Friar Tuck has just put a question. Thank you, Friar Tuck, asking whether Google is a buy now, Bill. I own some. I'll add more, but his question is Google a buy now in your mind?
That's exactly the right question to be asking. I'm pretty convinced Google's going to be the ultimate winner, but do you buy here, or do we wait to see if there's something more of a shakeout and we see prices come down generally, in which case Google will go down with the tide? I think the way to approach this is a kind of crumbling strategy. Little bit in here, a little bit in as it goes lower, or wait and see where this goes. That's a great question from Friar Tuck, and the answer is not immediately obvious unless you're willing to play it quite sophisticatedly.
Yeah. Unless you're happy to, whilst we're on the tanks analogy, unless you're happy to potentially say Hatta Hatta Panzerkata after this. So really put on your gloves, because we are potentially in for a really interesting 2 quarters there whilst this shakes out. The tensors, the TPUs. I mean, what's also interesting is there's going to be a presentation soon by Google. Friar Tuck, look out for it, showcasing the new Pixel smartphones and other devices like the Pixel Watch. You know that I am an Apple Watch fan, so I'll be interested in seeing what this can deliver with this Google system on chip, the SoC system. And it will allow all things. So every photo that you take, if it notices that you're taking more photos of, Bill, it might suddenly try to auto-charge you Bill's newsletter. That apparently is how smart they're trying to make this technology. Bill,
Brilliant.
credit as well. I know that you have been watching these markets. It's private credit in that market. Is that where we're going to see tremors start?
Yeah, this is an interesting one because people are always looking to see where the next crash is going to come from. And we're all talking about AI. And I think AI is one of these classic situations where something has become overly frothy and it's going to collapse. It's not going to be the end of the world. It's going to be a price correction. And we'll get something more realistic. And I think in the next couple of months, year, we're going to have a much better idea of how to invest in AI. We'll know who the profitable firms are going to be, and we will see that people who are building share but not profits disappear. That's one story. So therefore, what's going to be the next major shock? And a lot of people are looking at the private capital markets, which we always take to mean things like venture capital and private equity, but also this new market called private credit, which has really only been going since the global financial crisis ended in about 2010. It's now a $3 trillion market, and nobody knows what's going on inside it because it's private. And the thing is, it's a very different market. You're basically got big alternative funds and hedge funds and private credit funds are investing massive sums of money doing a single deal. Effectively, it's a bilateral loan in many cases to a borrower. And after we've seen credit weakness in the US with the collapse of Tricolor and First Brands, and then a number of other cases where companies have come across fraud with some European firms and things like Wirecard, find themselves massively exposed. People are beginning to worry, what if the whole private credit market is going to be terribly weak? And if you have a collapse in a $3 trillion private credit market, clearly that's going to hit the rest of the world because the guys who now invest in that through the private credit managers are all kinds of insurance firms, and you also have banks providing leverage. So everyone, of course, is getting nervous. And this week we saw a situation where a CDO, that's a collateralized debt obligation issued by BlackRock, actually ran into some problems because it includes in the companies that are invested, they've invested in a failing private equity firm, a failing education firm, and I can't remember what one of the other ones was. But as a result, some of the riskier tranches in that collateralized deal have hit problems. They're not getting paid because the payments are being put into the senior tranches, which is the way that these things work. And again, that's got people worried just how bad is the credit meltdown in private credit. So people are looking at it as the next vector of a market collapse. Now, I think this is just rumor and sigh.
Bill,
Yes,
yeah,
I'm
I was going to
sure
say,
there are problems.
how do we get data on this, given the hint is in
Well,
the
you
name,
don't.
it's private credit, so we can't get
Yeah,
data on
you
this.
don't. You
So,
don't. What
so
you got
how are
to
we
do,
going to see the cracks then?
see, the thing is, every deal is a bespoke deal in private credit. And one of the things that I do in my day job when I'm not doing www.morningporridge.com is I run Windshift Capital. And what we do there is we look at private credit deals, we originate some, but we also look at secondary ones. And if you're asked by a holder of a deal like this to sell it, you need to work out exactly what the trade is. It's not just a question of here's the credit rating, here's the coupon, here's the maturity. That's the way that the public bond markets trade in corporate bonds. With these deals, you really need to understand how they work. You got to do your due diligence. And I always ask the question, why is the holder who did this deal bilaterally suddenly wanting to sell? As a result, it's a very illiquid market, and you tend to have a massive bid-offer spread. Now, if we have a crisis and people are forced to liquidate and start to sell things, that actually is going to be an opportunity because, as we saw during the crisis in 2008, people who were forced to sell their CDOs and their collateralized mortgage deals because we were worried about mortgages, they lost an absolute fortune. Many of them lost everything. But over the fullness of time, most of these deals actually repaid. And I'm just working out if we have a crisis and a wobble in private credit, and there's suddenly distressed sellers, which we will start to see, and we start to see pressure on people who funded it, it may even be a buying opportunity, because I think there are problems in the credit markets. Companies are over leveraged. Some of them are going to collapse if we have a problem. If we see interest rates rise because we get an inflation spike, that's going to be fascinating in its effect. But we're not going to see a complete and utter meltdown in the credit market. But you may see prices thinking that there's going to be, and that's another buy the market moment. So at the moment, I would characterize my market view as I have my big bond and stock buying boots sitting right there, ready to jump in when I think the moment's right, but I'm not sure it's right yet.
Bill, we got a question from Rhys Davies as well. Do you know much about the merchant cash advance market, high interest loans to SMEs?
No. I know that there is a massive market where we do factoring. It's one of the things that we've done in a couple of the shard funds as well. And factoring, where effectively you are paying people cash up front as they wait for their invoices to be paid. That's a market that's been going on for 2 or 3 millennia. We know that the ancient Phoenicians used to do factoring. And it's one of these markets where there are always problems, because do you really know that the copper stocks that are backing this trade really exist, or who else might they be pledged to? So it is a market where you do see problems, but I can't say it's something I know an awful lot about.
And one final...
And you'll never hear me say that again.
One final question. We had Ron Williams from RWA here earlier saying that he's factoring in correction in Q1. Some even saying that maybe up to 20% before markets calm down again and start recovering. Is that something you're looking at as well, or do you have a different theory?
Angeline, you and I have been talking since spring.
I know you're
about
Palmer
the likelihood. I said back in the spring that I expected there to be an autumn for Americans, the fall correction in markets. It is underway. It's an orderly, almost correction. People are beginning to realize that this is no longer a speculative market. They are looking at the realities in bubbles like AI.
But Rich is saying the froth has come off now, whereas Ron is saying the froth, actually, the final froth will come out in Q1. So right. Which camp are you in?
No, there are 2 things going on. The first is we have a correction in expectations and speculation. The collapse in Bitcoin is part of that. That people have realized that speculation is a bad thing, and there are no more greater fools left investing in Bitcoin. That's why it's tumbling. The market is waking up to speculation in AI and correcting itself. Now, there is a risk of something completely different happening early next year, and that's if we see real macroeconomic problems, like a spike in inflation, which, as I was saying just a moment ago, would cause interest rates to rise. And that would really put crisis into the market. At the moment, we're anticipating people getting smarter about what they're buying in a market where interest rates are falling, which is going to support the market. But if we have a turnaround in economic sentiment, then next year it's a completely new game, which means you'll have to keep talking to me so I can explain it all.
That'd be fantastic. Thank you so much, Bill. I've got more questions for you, but I believe we're running out of time now. So I have to get that over to you on email. Thank you so much, everyone, for messaging in. Bill, hope you have a great weekend. I hope you catch some of that sunshine on the water, not just on land. And for the rest of you, whatever you're doing this weekend, may the odds be in your favor.
Have a great weekend, Angeline. Great to see you as always.
cash returns. Come on.
The cash returns.